Let's talk about healthcare cost inflation. So I've been doing a lot of research lately into kind of my assumptions for planning, and a lot of that has been around healthcare spending and what you should expect to spend in the future. And, even just paying out of pocket for a lot of healthcare stuff, you realize it just seems like it's so crazy lately and it's been out of hand. So how do you think about projecting out your future healthcare costs, especially if you know what you're paying today, or you can already look at what Medicare costs. Some software might just assume it's going to grow at inflation. Some are going to assume it's going to grow at inflation +1, inflation +2. So what kind of rate should you use for your future planning? Well, real quick, my name is Scott Caulfield. I'm a CPA and CFA charter holder and the founder of Sophos Wealth Management. Let's start with, what is inflation in general? I usually use a 3% inflation rate just as my baseline assumption. UBS puts out a global investment returns yearbook. It gives data on stocks, bonds, bills, and inflation. And that goes all the way from 1900 through 2024. And they peg US inflation at 2.9%. I've seen other ones as low as 2.5%, as high as 3.5%. It kind of depends on your data source, your starting point, ending point. I just like to use 3%. Healthcare inflation has been quite a bit higher historically. So if you look at BLS data, from 1947 through 2025, healthcare inflation has been almost 5%. It's been 4.95% annually. If you look at this chart right here, it will show you just how high CPI inflation has been for healthcare in the US historically. So this is the almost 5% average. You can see in the 70s and 80s, it was double digits for large periods of time. It's actually somewhat lower in the last 20 years than it has been over the long-term history, but still pretty high, pretty scary numbers. Now, taking this more recently, actually, from 2000 through 2025, the BLS data for healthcare is 3.3% annually. So not that far off the long-term healthcare average. Frankly, that kind of surprises me. It feels like it's been higher. Now, Medicare has been growing quite quickly. Medicare Part B is the biggest component of Medicare that retirees are going to pay for. And Part B inflation has grown over 7% historically. When the premiums first came out, 1960s, it was only $3. Most recently, that premium in 2025 starts at $185 before any of the income-related monthly adjustment amounts. So that $3 to $185, that is a 7.2% compound annual growth rate, much higher than the 3% inflation number. And then some of the more recent data has also been really high for healthcare inflation. So the Centers for Medicare and Medicaid Services estimated that national health spending grew 8.2% in 2024 and 7.1% in 2025. KFF has a lot of great healthcare data. They came out and showed that the median ACA marketplace plan, so that's for those who don't have employer-provided health insurance but aren't able to go on Medicare yet. So the median increase in 2026 is going to be 18.1%. That is going to be some sticker shock. Now, in 2025, they came out and found that the median increase was 7%. That 7% lines right up with the 7.1% expectation from CMS in 2025. So if we get another 18% bump in 2026, that is not going to be pleasant. Similarly, again, CMS has estimated that healthcare costs are going to grow 5.8% between 2024 and 2033. Now, because of that growth, they project healthcare to grow from 17.6% of GDP in 2023 all the way to 20.3% in 2033. So, we're talking about over 1/5 of US spending for GDP is all going to be on healthcare. So what should you use for your future healthcare projections? This is pretty tricky. A lot of people are going to be tempted to use a pretty high number given what we're seeing really recently and the fact that historically it has been higher than average. I warrant caution on doing that though. Just because our healthcare has grown so quickly in the past doesn't necessarily mean that it will in the future. And anytime you get something growing faster than inflation, you get kind of weird results in your financial numbers, at least if you do that over long periods of time. First of all, let's just look at what's happened to healthcare spending in the US. So again, if we look at the KFF site, they've got a chart showing how much healthcare expenditures as a percentage of GDP have grown. Now, back in 1970, we were in that 6-7% range. More recently, we're getting close to 20%. That is not something I would project to go up fourfold again over the next 50 years. What ultimately could healthcare spending get as a percentage of GDP? That is really hard to know that, but I would estimate that this growth is going to slow down if it doesn't just stay steady. If it were to increase, instead of 20% of GDP, it was 30% of GDP, I would hope that would only happen because of just unbelievable advancements, further advancements in healthcare. So I just wouldn't really project that out that far into the future. I mean, something that can't go on forever will not go on forever. So my kind of favored way to do things is to maybe set a higher short-term inflation rate over the next short to intermediate term. So you could use something like a 5% inflation rate over the next 5 to 10 years, and then bump down to your overall inflation assumption. So for me, that'd be about 3%. The alternative is to just use normal inflation from now into the future. Although, as we're seeing with these really big short-term rate increases, you're probably going to understate at least your next year or two of increases. There's a lot to think about here. It's a tricky issue because, so much is going to be political and going to depend on what happens with Affordable Care Act inflation, what happens with Medicare, just what happens with our health system in general. I just think our healthcare system now is just not looking very sustainable. I just would be surprised if we get continued increases way in excess of inflation way out in the future. If it's not already a crisis, it will be. That's going to mean some pretty drastic changes. So, I just would be strategic. I know some planning software, such as Right Capital, they're going to assume 5% healthcare cost inflation. Again, if you're on a 30-year time horizon, I think that's too high. Others like Bolden, for retail consumers, they're using 3%, so more in line with inflation. I think that might understate the short run, but is probably a better number to use on a 30+ year time horizon. So hopefully this video gave you some food for thought as you kind of project your future costs. Appreciate it if you like it, subscribe to my channel, and share it with anyone you think would benefit. Thanks.